All right, we are live. This is the Prospero.ai stock market live stream, joined by Dave Lauer today, and I'll let Dave introduce himself more in just a second. It's going to be George and Dave on the stream today, and we're going to talk about everything going on in the market currently, from Bitcoin to the Trump rally and the news about full self-driving to NVIDIA earnings this week. A lot going on in the market. An AI company making news last week, Palantir, switching from the New York Stock Exchange to the NASDAQ. Hello, George. Welcome to the stream.
Morning, Stephen and Dave.
How's it going,
Thanks
George?
for coming, Dave.
Thanks for having me. Always fun.
So much going on in the markets. We have a bankruptcy for an airline, Spirit Airlines, George's favorite airline to fly on. So we'll get into that. We have a lot of news happening and events going on in the streaming world. Hopefully you guys didn't tune in to the Jake Paul versus Tyson fight because it was a little disappointing this weekend, but we have Disney going profitable in their streaming and Netflix putting up big numbers with that. So much to get into today. Welcome, Dave. If you want to share with our audience a little bit who you are, why you're joining the stream, and yeah, we'll go from there.
Sure. Yeah. Thanks for having me, guys. Always fun to be on here and to talk markets with you, George. So yeah, I am the co-founder of Irvin Finance, and Irvin Finance is a platform to connect public companies with their retail investors, and also to provide data and tools to retail investors to better understand markets and companies and to become better investors. Basically, we focus on investors and their relationship with the companies they invest in. My background is high frequency trading. I did that for many years to start my career. Always focused on tech and quantitative analysis. Worked with large asset managers after that. Have been in the exchange space, working with IEX and sitting on the board of the NEO exchange up in Canada. I've worked with regulators before at the SEC, FINRA, CFTC, the Ontario Securities Commission. I've testified before Senate Banking Committee, SEC and CFTC on issues around market structure and electronic trading. I currently sit on the Market Structure Advisory Committee to the Ontario Securities Commission. And I talk with lots of retail investors all day, every day about markets, about market manipulation, and about investing.
Awesome. So I think where we should just start today is it what we saw at the end of last week, where we kind of started to see this rally we've been having get faded in the market. And in the Prospero app, we noticed that QQQ and SPY was also going lower, maybe people hedging or just taking profits, but it seems like it's kind of reversed today. So I'm wondering, is this end of the year melt up in question, or is it kind of resuming already, and the theory and the vision that we were going off of is still true? I guess, George, you could start us.
Yeah, I mean, I think there's a lot going on. We could probably talk about this topic for the whole time. But in the interest of expediency, I'll kind of zero in on what I think are the most important things going on. I mean, I think we're just not ready to get out of the volatile market, and I don't think we will be until some of what's being speculated about the Trump administration is more solid, right? I think what we saw was a lot of excitement around the perceived winners. And, I think, like we said, I think the perceived winners, a lot of them are the ones that are going to keep winning. But, what we always talk about is like, there's winning and how much winning, right? And at the end of the day, markets are driven by models. And when the models get kind of challenged in knowing exactly how much to price something in, that's where you might get some volatility, especially when we don't know for a fact what's going on yet. And I think that if you look at our typical behavior, or Prospero's typical behavior in a time when, net option sentiment of SPY closed the week at 3 and QQQ closed at 13, typically we would probably be like 2-to-1 bearish in that situation. But we ended up being 8-7 bullish, coming from, I think 12-6 bullish the week before. And some of that is self-explanatory, right? Because of all the volatility and the swinging, we weren't ready to go all the way in the other direction yet. We wanted to see some data. And sure enough, QQQ net option sentiment is back to 41 today. So I think that was to a large extent validated. And another thing that's validated is, we've obviously been writing Tesla and Coinbase going into the election. And what I said about, the modeling and things like that, I've been saying a lot in terms of we know Tesla, or we have every reason to believe that the reason Elon Musk and Donald Trump were buddying up so much is some reasonable explanation from Elon Musk that there would be something coming back to him. And, we talked about, we don't know when the full self-driving is going to come and to what extent, and if there's maybe even some exclusivity for Tesla. Those are all different factors that could, perhaps turn Tesla into the most valuable company in the world, especially if there's some kind of exclusivity in America there and there's an ROI. But obviously we got the announcement today. We see Tesla rally. We held Tesla, even though we saw it end the week a little tough last week because of what we're saying, right? There might be some volatility to work out, but long term, I think there's going to be some real value coming through the pipe for Tesla and full self-driving, and especially because the margins are so much higher on that than selling cars.
Yeah, I think these are all really compelling points. And to me, what I saw in that sell-off last week, which I think from the S&P's perspective, erased all of the election gains. From NASDAQ, from the Qs, not quite, still good gains on tech, but took, wiped a lot of them away. Is I think we saw the market starting to adjust to uncertainty, right? So it felt like, okay, there was a ton of uncertainty going into the election, and it was a very volatile market. Suddenly, you had a lot more certainty, or the perception of certainty, and you saw the VIX plummet and markets just go crazy, right? And that was a very clear trend. Now, or at least at the end of last week, VIX popped up, markets sold off, and I think the markets, like many of us, are trying to wrestle with what is the Trump administration actually going to look like? What is it actually going to do? What are the implications of those policies? And I think you're highlighting a couple of really good areas, right? Like autonomous driving and tech. There's reason to be very bullish on that as investors. Now, I'm not talking about the tech itself, because you don't want to get me started on what I think of Tesla's FSD technology. I don't think very highly of it, and I say that as someone who's spent some time in the autonomous driving space. Whereas when I see Waymo and GM, I think that their tech is far better, and it's out there and working in cities right now, which is just incredible and very impressive. But that aside, yeah, who knows what a Trump era NHTSA is, what the relationship is going to be between them and Tesla, because I can tell you, NHTSA and Tesla's relationship has not been good until now. That's going to change, sure. And like you said, the announcement today, there are clear changes coming to autonomous driving that are going to be very good for Tesla's business. There are clear changes coming to crypto policy and to the SEC that, Bitcoin has gone nuts. It has remained elevated. Something that's interesting, a way to possibly play this, is that crypto historically it moves in waves that are very distinct, and Bitcoin always tends to lead those waves. Then Ethereum always tends to catch up, and then the rest of the crypto space tends to follow after that. So personally, that's how I'm playing this. I mean, I don't really trade crypto, but my crypto portfolio is kind of set up in that way, where you have Bitcoin leading the way. Hey, that's great. Now you have more liquidity with which to do other things, and often those other things are in the altcoin space. And I think there are still good opportunities in the altcoin space for the highly used one. Like I'm always a big Avalanche fan. I think Avalanche has a long way to run. I think Solana is very compelling here. I think XRP with this transition to a new SEC is probably going to be a big beneficiary of that. So I think there's a lot. Like crypto is another sort of obvious space, but what I think is maybe less obvious and what we're seeing, especially today, when you look at crude oil and gold, you're seeing them move along with the equity markets. And I think that I was talking about this sort of in the aftermath of the election. A lot of these Trump policies are actually very inflationary. And so, in so much as we are going to see a renewed bout of inflation from his tariff policies and all of his sort of protectionism and his views on immigration, all of these things are very inflationary. And so inflationary commodities, the stock market in general, those are great places to be in an inflationary environment. Crypto is one that does seem to be responding as well, both to bullish crypto market regulation outlook as well as an inflationary outlook. So to me, that's where I see the market moving at the moment. And then of course, depending on Treasury we don't know who's going to be Treasury Secretary. The people that they're talking about have very different views on protectionism. Who's going to get put into place there? That when that announcement is made, you're going to see markets react real hard, real quick.
One of the more interesting things I saw in this election cycle was, and I don't know for the life of me how the Democrats couldn't manage to message around this at all, but there was this. You laugh, and I do kind of know, but yeah. There were so many inflationary policies in the last Trump administration, especially, the corporate tax cuts. One thing that I always talk about is that a typical inflationary cycle has about 10% in corporate profits accounting for that. And they said this one was over 50% corporate profits.
Yeah,
and you have to look at the tax cuts as part of that. Yet, every time the Democrats got nailed on this inflation, they couldn't manage to do that one simple, and that's not a complicated line that I just drew. Yet I never saw, and I don't know if that's because the Democrats think people are stupid and they don't get that or like whatever, but for the number of times I saw them nailed for the economy, that puzzles me. And as you were talking, I was thinking like, oh my God, is the Trump administration actually going to be able to pull off causing inflation again and then maybe blaming the Democrats? Because that would be
very plausible at this point, frankly. Yeah, right now the Democrats are associated with inflationary policies due to fiscal policy, which frankly seems absurd to me. Like it wasn't fiscal policy that drove inflation. I can't say it didn't contribute in any way, but that wasn't the drive. You had zero interest rates forever. And then you had COVID, which totally destroyed supply chains. And then what we saw was corporate profitability dramatically increase, right? Like those things all sort of came together. But now, yes, inflation is now a Democratic thing. And now these inflationary policies are going to come in.
Yes.
And it's going to happen again. And then another person was pointing out that like the all of the infrastructure work that the Democrats passed, so much of that is going to happen over the next 4 years. He's going to come in, he's going to be able to blame them for inflation and take credit for all this new infrastructure.
Yeah, it's
quite brilliant.
It's an interesting one. Stephen, I wanted to cut in on one more thing before we move on because it's part of the market, and I always got to have Dave's opinion on this. GME has been up in our signals again. And beyond that, I noticed I made an AMC video like a month ago, and I have more and more people trickling in to tell me I'm an idiot for saying that they were in a bankruptcy spiral. Like, what's your dad like? Is it I'm just chalking it up to this. I don't know if there's anything else. I think there's some perception that the Trump administration is draining the swamp, and draining the swamp will mean getting the short squeeze for all of these stocks that have been waiting to squeeze forever. is that, you're in this more than me. Is that what you think is going on, or is it something else?
It's weird to be on. I've been on the the receiving end of that kind of feedback all the time, so I feel your pain. I think that there is a large portion of these sort of retail heavy names that believe that believes that Gensler was never going to help them or has been a huge letdown. So let's start there. And on that, I've come over to that. I've been disappointed. This SEC, we had the only opportunity I've seen for real reform, the only opportunity I've seen in a long time for taking on, these influential incumbents in market structure and doing away with sort of Bernie Madoff era rules, and you didn't do it. That's it. It's as simple as that. So a lot of them are let down by the current SEC, and they hope that this change is going to get them to exactly what you're talking about. Now, I think that there are two ways to look at that. The way I tend to look at it is, what did he do in his first term? It's really as simple as that, right? It's not like he's a blank slate. We had 4 years of Trump. We had 4 years of Trump SEC that was run by Jay Clayton. Jay Clayton was loved by the industry, absolutely loved. Really, they see him as one of the best SEC chairs in a while. He has been nominated, I believe, to be the U.S. Attorney in the Southern District of New York. So, and that's where most financial crime gets prosecuted. So, in terms of what can we draw from his first term and what does it mean for this term, he's sticking with his guy, and that tells me there's a lot of continuity there. We still don't know who's going to be the SEC chair, so it's hard to know at this point what the regulatory policy approach is going to be. We know that his focus is on crypto. My sense is that that's the primary focus for them in picking an SEC chair. Is they're focused on crypto. They are not focused on market plumbing. Now, Patrick Byrne is heavily involved with Trump administration, as obviously is RFK Jr. And both of them have brought these issues of market plumbing and market structure to, both of them have been focused on it. Trump has a company that was, up and down and very volatile, and many people think was targeted by short sellers. I don't know, because I haven't seen the evidence on it, so I won't comment on that. But you had Adam Nunes come out and say that they're going to be focused on short selling and focused on attacking Citadel. This was many months ago. Will they actually do it? And who is giving money to will they even be able to do that, right? So you want to think that some of this stuff can just be done by federal agencies, and that's not the case, and it's especially not the case anymore with recent Supreme Court decisions like getting rid of Chevron deference and such. So what you have to understand is a solution will have to come from both the administration as well as Congress. And when you look at who funds Congress, two of the top donors to the GOP, to the tune of almost $200 million this cycle, were Ken Griffin and Jeff Yazd. They are, the biggest market makers in the world, and it is hard to imagine that there will be a fundamental shift from a market plumbing and market structure perspective. Doesn't mean it can't happen, but I am highly skeptical, given that, and given his first term, and given what we've seen in the Southern District. So I'm looking forward to being pleasantly surprised, but no, I don't see right now that happening.
Well, you know me, I'm skeptical on this stuff. But one thing before we go back to our regularly scheduled programming, GME is kind of one thing, right? And yes, I even see long-term options looking better on that. It's a pretty, like I said, it looks pretty good in the signals. Now, when I look at AMC, I just don't I read not too long ago, and when I made the video, I read something that basically said they've got about a year of runway left. Their credit rating is lowering. How can this stuff not make its way to the retail army, that there are real problems with a company and perhaps real reasons to be shorting a company, as well as the massive dilution, everything like that. How can something like this go on for so long as the company does get closer and closer to bankruptcy, with, seemingly new people every day coming in and thinking that they're closer and closer to victory?
You're touching on a question that's sort of a very fundamental question of our time, which is, how do you combat the social spread of misinformation? And I'm not going to pretend to know much of anything about AMC. It's not something, I've spoken with a lot of AMC investors. I spent a lot of time with them at this point, last year and the year before. It's not something I have paid much attention to in recent times. And it was never something where the case for it really that I really found compelling. I think you're right. GME is something that's fundamentally different, both from a sort of, is there still this sort of structural squeeze potential in it, and has the bear case gone away since the business has turned into something truly viable and well capitalized? So
yeah,
to me,
I think it's just the debt
very
position,
different,
right?
Yeah.
And it's just like it's that disconnect of like, how can two businesses be viewed so similarly when there's a drastically different capital structure? And I think the business model is one thing. I think that's hard for a lot of people to get. That's the one thing that I can't quite wrap my head around. The fact that people can kind of like, they know there's debt, and then people will say things like, the CEO said the debt's not a problem, or they're not going to, just they toss little platitudes at it. But, intellectually, it's got to be able to dawn on people that a company that is not making money, that has debt, is not in a good situation, right? It doesn't feel like we have the answers here.
I think people struggle to understand the implications of debt that overhangs a business. I think that's something that maybe as a startup entrepreneur you understand a lot better than most, right? And I think capital structure is not something that people understand very well. And if you want to look at what happened with Bed Bath & Beyond, I think there's your sort of perfect example of a really fundamental misunderstanding of capital structure and the implications of that in a bankruptcy or a potential bankruptcy. So, I'm not going to pretend to know what the debt situation is with AMC, but if their rating is being downgraded, that's something that is, I think people should really take to heart. Is that true?
I think it's all the way at SD now.
Yeah, that's something that people should definitely take to heart, right? The rating agencies generally, they're often conflicted, often problematic, but from what we've seen historically, but from a debt rating perspective, usually objective and pretty accurate, right? So
that's where I think that people don't understand the nuance, and that's a real problem, right? Because I'm as skeptical as institutions as anyone. But the real historical problem with institutions is overrating credit, right? We don't really have
that's where the conflict usually comes
problem historically, right? When they put something down there, it tends to be because they really deserve it. I can't think of a situation where a company has been kind of targeted debt-wise. I don't know if you could think of anything there, but that's where, and I know it's hard. I know the nuance is hard for people, especially people that don't have as much time as you and I to get to know investing. But that's where it's really just I wish people could do a little more critical thinking on it, where it's just if you told me that, maybe a AAA rating was not a AAA rating, you'd have my ear, right? I'd be they do that. But But I haven't heard many or any situations where the rating agencies are like putting things lower than they should be. That normally is based on some very clear evidence, and it's kind of the other side. They don't really want, the markets are not really in a situation where people want to lower the credit rating of something.
Mm-hmm.
There's a lot of forces.
There's no incentive, as you're saying, like there's no incentive to do that, right? Unless you really see it and you want to make sure you're right. You want to be seen as right for the most part, especially when you're talking about debt at these types of ratings. Versus like what George is talking about, which is the incentive to overrate something is usually because, if a company is paying for something that they're issuing to be rated, or, what we saw in the great financial crisis, which was all of these mortgage-backed securities being rated as AAA, or tranches of them being rated as AAA, when in fact they weren't. And that was what sort of kicked off the contagion of that systemic crisis. But again, that was because the banks who were marketing those bonds were paying for the ratings. That was a fundamental conflict that led to overrating. It's hard to, we haven't seen, at least not that I'm familiar with, a situation, as you're saying, George, where there was a conflict that led to, like an underrating. It is something, if that's happening with AMC's debt, I do think people should be paying close attention to that. I agree. Yeah.
All right, Stephen, you're back. You're back in. I had to get Dave on that one.
Well, since we're on this topic of companies with terrible balance sheets, we had a company file for bankruptcy today, or this past couple of days, Spirit Airlines. I wanted to bring this up because they were supposed to go through a merger with, I believe, JetBlue in the past year that got denied by the regulators. And I'm wondering, now that the stock is basically worthless, all the shareholders lost money, all the people that work there are in flux, was it a mistake to not allow that acquisition to go through?
Well, it's really funny. I'm excited to get Dave's opinion on this too. But from my perspective, I flew Spirit Airlines once, and it was a horrible experience. And everybody warned me. And there's this like thing in the air about Spirit Airlines, about how horrible it was. And I was like, I tried it once. It was much cheaper than any other flight I could get. And they canceled my flight, basically delayed my vacation a day. I was paying for the hotel still. And they gave me $100 credit that I ended up giving to someone else because I was like, I'll never fly Spirit Airlines again. And if you look at this, JetBlue and Spirit Airlines isn't really like a monopolistic thing, right? That when these things normally get shut down, it's like, oh, that those two are too powerful together. So my only conclusion is that these regulators have flown Spirit Airlines and just want it to die. And I'm pretty I tend to be a pretty hands-off kind of person. But as you can probably tell, I don't think Spirit Airlines being just made to die is the worst thing that's ever happened to the world.
I don't think I've ever flown Spirit for sort of precisely the reasons you're mentioning. It never struck. And I flew JetBlue a ton as a discount airline, and they were great, especially when they really first started. But no, I saw an interesting conversation about this on Blue Sky actually this weekend, and I thought the point made there was really compelling. That one, and this is a much bigger, deeper, broader issue around mergers and acquisition. I think a regulator that is by default supremely skeptical of any consolidation is absolutely a good thing, and the best thing that this administration has accomplished. And so I think generally we should not be encouraging consolidation in industries, especially air travel, which I don't know if anyone listening has flown in the last couple of years, but it's pretty fucking terrible. Sorry, can I say that? I don't know. It's really
no, we curse here. Don't worry about it.
So awful. It's and a huge part of that is due to consolidation, and a huge part of that is it is something that you could pin on the Biden administration. Pete Buttigieg as transportation secretary, there was a lot that he could have done better to make air travel a better experience. So all of that aside, do you want to address sort of capital structure problems and corporate inefficiency through consolidation. That was sort of the conversation that was happening. And I come down on the no. That's not how you want to deal with this. It is better to let them deal with it through the bankruptcy process and potentially come out of it still a viable company and competitor, because this is like a pre-planned structured bankruptcy. So it's not like they go out of business and everyone gets fired. This is, okay, we're coming in to reorganize our capital structure and come out of this as a more viable company. I think that's what U.S. bankruptcy court is built for. It's a good use of it. It's what it helps keep the U.S. economy sort of vibrant and competitive, whereas consolidation does the opposite. So no, I'm glad regulators did not allow it. It would have been, a problem in the airline industry on the margins, and I think that bankruptcy is the right way to do it. Yeah. And I hope that people aren't treating this bankruptcy as they did the Bed Bath & Beyond one, right? This is not something where you want to kind of take a flyer on equity, and this is not financial advice. Maybe you're right, maybe I'm wrong, but again, like going into a bankruptcy with a company with a lot of debt, you don't want to be jumping into the equity. It will most likely end up worthless.
So next thing I want to talk about is probably the main event of the market this week, that being the NVIDIA earnings. George and I have covered them every time. I think the last earnings there was watch parties for, which we were talking about, which is kind of funny. This one doesn't seem to be as hyped up leading into them. I don't know if that's something that is telling about how they might come out. But NVIDIA was down today after a headline came out that some of their first Blackwell shipments are overheating. Is that a major concern? Or is this something that we're going to buy the dip in and we're expecting NVIDIA to blow us out of the water again when they report?
Well, I mean, NVIDIA lost their like 200% gain streak. They had three in a row, and then it was like a paltry, I think, like 130% last quarter. So that'll break up the parties quickly.
Pennies, yeah.
I don't know how. I can't really speak to how often early orders of theirs overheated or anything. I mean, I will say that that's not something I'm really familiar with them. So in that sense, you always have to be a good anomaly detector in investing. And that seems like a bit of an anomaly to me. And if you think about it, even from like, my semi-layman perspective, I'm by no means a hardware engineer. As these chips get more and more advanced, they're trying to squeeze more and more power into a very similar sized package, right? So it stands to reason that at a certain point, overheating would become a problem. Now, I would think that they're good enough to test this, work this out, everything like that. Again, I don't know the frequency of this, or, what I could very easily see is this is a part of the development, and typically this happens in-house and not in their early shipments.
So one thing to add to this, which I think you'll maybe find interesting because it involves another one of your favorite companies, is what I have read is that SMCI, Supermicro, is actually excellent at cooling, and that part of this is because of SMCI's troubles. NVIDIA it's sort of a knock-on effect of that, and I this is just something that I've read online. It's not something like Supermicro is not a company I'm terribly familiar with technically anymore. I used to be a big customer of theirs. I'm back in my HFT days, but that was a long time ago, and I'm not anymore. So but I could see it. Like it wouldn't surprise me that SMCI had a really good approach in tech for cooling, and that now that they're it's sort of questionable whether they're going to be sort of a big distributor of NVIDIA tech. Is that going to lead to trouble for NVIDIA? And does it open the door? Maybe the concern is not, will NVIDIA figure this out, because it's a cooling issue, and they probably will, as you're sort of thinking, as they work through these quality control issues. But does it open the door for someone else, to get in there and compete? Because maybe this pushes their ability to mass distribute Blackwell down the road a little more than they had hoped. And are we going to see that in this week's earnings? I don't know. I don't have a sort of unique edge on that.
That is interesting. I mean, one thing that I will say is that, yes, when I was researching SMCI, we have since turned on them, as the Prospero signals have, not just us personally. But that was kind of an interesting case study. I've never I think I saw them in the 90s in upside, and last week it was all the way down to 20. I've not seen a move so big, but it makes it makes sense why that was the move.
Yeah.
I mean, I'll say a few things about what you said. Like, one thing is, yes, I like the cooling and the unique aspects of their cooling system and their patents around that was the reason that I was, was kind of the value reason when I saw the signals working, that I was like, oh, there might be something to this. Mm-hmm. One thing what you said makes sense in some kind of theory, but also I don't necessarily see the connection between accounting issues and malfunctioning technology, right? I don't think maybe they're spending a lot on accounting and comms and things like that, and that's forcing them to cut corners, but I don't necessarily see the direct line there. But this is a much bigger story if there is, right? Yeah. If they are cutting corners because they need to do that, then that is not a small problem for NVIDIA. That is a big problem, right? Because I know a lot of their systems, Blackwell included, were built to work with SMCI servers. So that is something to follow. And I mean, I hope for their sake that it isn't an issue of product, accounting issues leaking into product quality. But what I was going to say before you jumped in anyway was that I am concerned about NVIDIA. And I am concerned. I mean, Jensen Huang tends to be pretty conservative, right? It was, he hasn't had to be really conservative, but I remember a few quarters ago when there was just some worries about demand in China, and that sent down the stock, right? Mm-hmm. He likes to get out in front of things. And I'm worried, and I have been worried even before Trump, just with tensions there, right? And tensions around the election, which way it could go. But now that it's even more solid and there's, strong talk of these tariffs, I am definitely worried about what demand could look like in China for obviously the chips that they're allowed to sell there. Right. And what I have been saying is, kind of the reverse of what I've said in the last year, which is I'm actually now bullish on non-chip AI and a little more cautious on chips, when that's been kind of the reverse where I've been at, because I do think, I don't necessarily think that the tariffs or any tariffs or anything is going to definitely cause demand issues for chips in China or anything in China, right? We don't know how retaliatory it'll be. I mean, on the chip side, China's pretty practical. They might be we want our fast chips anyway, even if they cost, 10% more. They have a pretty big appetite for them. So it could be nothing. But you always have to manage perception. And I think if we know those, until we know those answers, I'm very worried about strong corrections on NVIDIA with any bad news whatsoever, any concern with Jensen Huang. So NVIDIA is kind of on my no fly list, as I would say, pretty much all of the chip makers for the foreseeable future. There's other tech things that I love and I'm less worried about. So that's where I'm at right now.
Yeah, I think that's that. I think I'm very much in agreement with you on that. And I haven't been as bullish as you have been on the sector, much, to my, I would say to my detriment. Not, you've absolutely been on top of it in an impressive way for a long time now. And I certainly have been bearish, but I haven't been, all in as many others have. And kudos to them, man. Great call. But at this point, when you look at valuations and you look at sort of the fragility of a potential warning, the stock to a potential warning like that, or sort of a long-term trend, which is that the U.S. through the CHIPS Act and other executive orders has sought to protect the semiconductor industry and the AI chip industry in such a way as it did with other technologies. And each time that has happened, China tends to develop something homegrown that is often very good and very inexpensive. And we're seeing that play out with electric vehicles right now. And chips seems like a no-brainer on that. And so has sort of the US chip industry had its run with this massive move over the last couple of years, and gotten pretty far out ahead of its skis. And even if it remains the global leader, there will be competition. As simple as that. Like the semiconductors and AI chips they're the oil of the future, or the oil discovery and exploitation equipment of the future, if data is the new oil, right? And so it's something that these valuations don't have me in a place where I think, oh, even if there's a blip, the market's going to take it in stride. I don't think that's true for a second. If there's a blip, if there's demand that gets shifted out a bit for any one of many reasons, the market is not going to react well to that. So I do think, look, the thing that you can easily say is we're going to see a lot of volatility this week. Which way that'll be, it definitely depends on what NVIDIA has to say on this cooling issue and sort of the market's perception of the Chinese demand issue. I think absolutely that's right.
Yeah, and I mean, I think the last thing I would add there is, and I know we're going to talk about this in a later section too, is quantum computing is kind of lurking in the background here, and it's one of those things where what I always say is, talking about the next technology, we could be sitting here talking about quantum computing lurking for 5 years, 10 years. That's my one lesson in following tech. You never know. You never know when it's actually going to arrive. However, there is that other side where even just a good stride in quantum computing, right? Even if it's not ready to be delivered in any server soon, just a good breakthrough, getting closer, that's something that could start hurting all of the chips as well. And I think the last kind of important thing as it relates to China is like, there is the fact that it's not like we even let Blackwells go there, right? We don't let the best chips going. So the gap that they actually have to close to catch up to NVIDIA is actually smaller than, in America, by orders of magnitude. So I think that's the other important part of what you're talking about, Dave. And it's just like, it's one of those things where, from my perspective, it was the arrangement of demand for AI that was causing me to just be like, I feel safe with chips. Like all of this chatter, all of this VC funding, to me, I was like, that has to translate to chip orders, right? I believe that's slowed down a little bit, but it was at a breakneck pace. And then you always kind of have to be flexible. Like, yeah, do I think it's a good bet that the next year, 2 years, NVIDIA is still looking very good. They're growing at huge rates. Like, I think that's a good bet, right? But the downside is significant. And the downside is significant on all of these events that we're talking about, whether they be global tensions, technology advances, broadly, technology advances in China more specifically. There's a lot of, for me, it's like there's a pair of concern and added concern for these names, plus added upside to things like Tesla and Coinbase and other things that I've now shifted to, that it's both, right? Orders of magnitude, those are more exciting, and NVIDIA is a little less exciting. And I think that's how you always have to look at things when you're building, especially a high conviction portfolio.
Yeah, I think that's a great way to look at it. I mean, I tend to think in terms of risk and reward, right? And if you think about the scale of risk and reward, you really want to go after those things that where it's very tilted for reward, and the downside risk is very contained, and that was true for a while in the chip space, and maybe it's just sort of shifting now. Even if it's just evening out, there are other opportunities where it's not even like that, and where you can really go chase it in what you're talking about in a high conviction portfolio.
Yeah. And if you want to just like cut it down to like kind of a very anatomical level, you can even just look at it like this, right? Trump winning added rewards and not new risks to something like Tesla and Coinbase, right?
Right.
And it added new risks and not new rewards to NVIDIA, right? So you could really just look at it on a logical basis. We could talk for a long time, but really it's kind of like, it can be a simple scale like that sometimes.
Yeah, that's right. Yep.
Well, based on everything you guys have been saying, I'm very curious about how you'll feel about the next company we're going to talk about, Palantir, which was moving last Friday based off the news that they are leaving the New York Stock Exchange and they will go to the NASDAQ. It seems like today that move's kind of getting faded, but not totally. The market cap for this company is now $150 billion. It's just been one of the major AI winners this year. The rally is unstoppable. But is it interesting at this point, at this valuation now?
Dave, I mean, I can go. I was going to let you take that one first.
So this is a Peter Thiel company, right? So like when I'm looking at the Trump administration and who's going to benefit and who's not, people who are close to him or helped fund the campaign are the ones that are going to benefit. Peter Thiel basically created JD Vance, right? Like he's Vance's main benefactor. He brought in a lot of funding for Trump's first campaign. He brought in Silicon Valley on this most recent one. Thiel is a major player in Trump world. He's a major source of influence, and I'm not really sure that I see why, frankly, a stock would rally from moving its listing venue over. Like the listing costs are kind of like rounding error, in the grand scheme of things. And I don't know that you, from a corporate value perspective, that there's a fundamental difference in listing on NYSE versus Nasdaq. So to me, I think the Palantir story is more one where actually I'd have to look it up, but I'm pretty sure they've announced like really great earnings recently. And they've been sort of a mainstay of government AI. Like you go to almost any government agency that's focused on AI or implementing AI or using it, and they're using Palantir. And so to me, that's something where, again, what's the risk to Palantir? It's not very. I don't think there are many fundamental risks out there. They're one of the only giant software AI players. What's the reward? The reward is that government is going to be using AI more and more, especially if government gets slashed from a personnel perspective. They're going to need technology to help fill that gap. And the guy who has been responsible for the vice president's political career, as well as bringing in Silicon Valley money to help fund this presidential campaign, yeah, he's probably well positioned to take advantage of that.
Are you suggesting that Trump plays favorites?
He's very even-handed, yeah, especially with the people that he disagrees with. Yeah.
Yeah, I've never. It's a new thing I'm hearing on the live stream. So I had an ulterior motive when I had you go first. I wanted to check on some value things with Palantir, and it was actually even more extreme than I thought. They're looking at a 143 forward PE. Compared to even like a 38 for NVIDIA, right? Yeah. And it's 55 EV to sales.
God, I should have looked it up. I guess
compared to 30, a pretty high number, I think, for NVIDIA too, at 36. So I think
it's up 50% in the last month, in the last like 2 weeks since the election.
Yeah, I mean, that's when it just gets, it's really tough these days to pick apart all this stuff and say, because like I could easily see Palantir just running for the next 4 years, and me saying like, well, you know, it looked high by traditional value metrics, but traditional value metrics don't always play anymore, right?
Yeah.
Like 20 years ago, you could look at a stock that was trading at too high of a multiple, and you could be damn sure it was going to come down to earth sooner or later, right? And I'm not saying that it won't have some corrections. And maybe after a big run, you know, someday it gets a little more reasonable. But sometimes what happens these days, in that someday it gets a little more reasonable, is the earnings actually just like catching up to the price a little bit because of things like how much money you can raise with equity offerings, or even, you know, debt based on the value of the company and the kind of capitalization you can get and the growth that you can get. So I think it's one of those things that I always come back to, where I'm just like, I can't play something like this, right? I can't play something like this because there are better risk reward alternatives, right? I could easily see Palantir being 200% above this next year, or also sitting right where it is today. And there's just other stocks I have a much higher degree of confidence that are going to be up, you know, 20 to 50%, like with little doubt in my mind. Like App, like is one of our tech plays now. Coinbase, Tesla, all of those. Oh no, I've lost my camera. All of
Your
those.
takes are too hot, George.
Yeah. Oh wait, am I getting it back? Never mind. All right, I'm going to switch to my other computer. We'll hear your take on this as I switch to my other computer.
No, I mean I think the story with Palantir is clearly not the fundamentals, and the rally was not related to the fundamentals, right? This was a rally related to the election and Peter Thiel's position in Trump world, and sort of maybe in a way, as I sort of described, the idea that government will need more AI with fewer people, and Palantir is best positioned for that. But it's not, it's not something that's based on a fundamentals argument. I didn't know what the forward PE was. It's not unbelievable to me. I would have guessed it was very high. It's much higher than I would have thought, but it's still like, that's not a surprise, because this is, like I said, this is just a rally based on Thiel's position in Trump world, and you're seeing it, you know, in all sorts of places, where those companies like, you know, like the private prison stocks are going nuts, right? And you know, other things like that, where you're thinking to yourself, okay, you know, who is in the right place at the right time right now from a political policy perspective, not necessarily from a corporate fundamentals perspective, right?
Yeah, I mean, and it kind of has gotten me thinking about something, and the more I'm like, you know, talking about some of this stuff to the press, what I've been thinking about is like, are we actually departing from a world where valuations matter, right? Or is it just going to be something that old people talk about, right? Because I'm just like sitting here, even as I talk about Palantir, I'm just like, I'm just like, what do I actually think the chances are of that downside scenario? And I'm not sure it's 50-50. I just think there's a much higher chance that it goes up, but like that goes against everything people like me and you have been trained for. And that's not even the older generation than us. Right. That is like even less open to hearing about these things. And, you know, I think about Warren Buffett, like on the sideline with all his cash.
Yeah.
Right.
Yeah.
And I'm just like,
it's not looking so smart right now.
No, he's not. Like, that's what I was going to say. He's not looking so smart. And I'm not like, the valuations aren't going to get more reasonable, right? So is he going to just be sitting there on the sidelines during like an epic bull run?
And think
Or
about we saw, I'd have to go back and look at the chart. I think it was it was earlier this year. We saw like a bear market, right? And it lasted like what? A week? Like
yeah,
2 weeks, right? And like it did. Not a bear, but we saw a correction. We saw what would officially be termed a correction, a 10% drop in markets, and it was like the fastest one ever. So it's not that from time to time the market doesn't like wake up and be like, oh shit, what have I done? It's that it's like it passes. It's so fleeting. It's like a fucking TikTok, right? Like that's this is the generation we're in now. It's the TikTok generation of markets, and things are just fast and fleeting, and fundamentals don't matter nearly as much. Cliff Asness, I don't know if you follow much of what he does. He's the founder and CEO of AQR. He's a renowned quant and student of markets, and sort of from the FAMA French efficient markets school, right? And multi-factor analysis, and he's struggled for years now because his value-based models have really underperformed growth dramatically, right? It's been a terrible time for value for like a decade now, maybe more, but for a very long time. And value is the kind of thing that resonates far more with me, as you're talking about, George. This is sort of the old school way of looking at markets, that undervalued companies will catch up, that overvalued companies will come back to earth. It's all about reversion to the mean. And he sort of lamented the idea that maybe that's not true anymore in this world of social media and fast trading, and it's just that it's a different world now. And I don't know. I don't know what the answer is. There's always the risk of saying this time is different, but it sure does feel different right now than it has. If you go back 10, 20 years to the dot-com bubble and start to like look at markets from, let's say the late 90s through to the great financial crisis, that was a market that had euphoria, but then came back down to earth, and the good companies won the day, and those have become the most valuable companies in the world today. Are we in the midst of a similar cycle, or do those cycles get muted now because of sort of social power?
yeah. I mean, and I think as you were saying that, what kind of I'm kind of thinking back to earlier in the stream when we're talking about like, hey, how can the Democrats, how are they not able to explain, how some of this inflation came from the prior administration, right? Like, how could they not message that? And like, as you were talking, I was saying, like, is it like, do we just live in a world where messages have to be that simple to work? Like, where Trump just has to be like, I'm president, I'm going to make the stock market go up, right?
Yeah.
Because above all, anything that's making me look at reasonable valuations and that back and forth I had in my own head, like about Palantir, is just like, I have all of this, like, reasonable markets balance, blah, 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 thinking about that, like valuations come down to earth. And then there's this other voice that's just like, I just think this administration is going to do everything they possibly can to make the stock market go up. And like,
right,
so,
for sure.
like,
It's if you look like in the midst of the election, I remember reading this thing, which was, it was looking at swing voters, and they were like, okay, what does Trump stand for? And it's like, oh, tariffs, immigration, and deregulation, right? Like very simple, right? And immigration, right? Like isn't views on immigration, but four words, you could sum up what he believed. They're like, what do the Democrats believe? Like, well, and now you're getting into like a complex discussion of policy and all of that.
yeah,
Yeah, I mean, this is a time where simple is what sells, and simple is how to communicate. Like I said, it's like the generation of Twitter and TikTok, and you've got, even if you can post longer tweets to, it's still 140 or 280 characters kind of takes the day usually. And if you can be concise and succinct like that, you're going to get your message across. And it's something that Democrats are terrible at.
yeah. I mean, and then the then question, I mean, I've grown more accustomed to momentum, right? And we even built a momentum score because I'm taking things like, social sentiment and technical, and net option sentiment, basically. technical flow and net option sentiment, throwing them together and just be like, I think this is the best way to look at the market now.
Right,
if it's going to play momentum, like, what is the truth in the market? Is there momentum? Is there not momentum?
Yep.
So the question then becomes, like, the next 4 years, does just like maxing out on risk and growth win, right? Is it reasonable to say, you know what, that's going to win? Or are we still trying to manage, like, is there still some value to managing risk in your
Man, I don't know. It's like if you look at the yield curve, it's like a recession has been just around the corner for over a year now, hasn't materialized. Still, it looks like it's reinverting right now. It's really, I don't know. Like, is the simple answer. And it's hard to do, like, I like to do macroeconomic analysis. To me, that stuff makes a lot of sense. And from a macro perspective, we could be heading into like a really juiced up period of time, high GDP growth, but high inflation. And that's very bullish for the market in the short term. What does it mean? I don't know. 2-3 years down the road, I have no idea. I find it really hard to forecast to any like timeline right now, other than, I don't know, the next 3 to 6 months, in which I feel very bullish. And past that, who knows? So yeah, I feel like there's some economic difficulty coming. I feel that like the yield curve is telling us that. I don't see a simple answer for a lot of the things that Trump has professed that he wants to do, and the simple things for him to do strike me as very inflationary, and that could mean that the Fed has to be more aggressive in coming off their easing cycle, maybe raising rates again. To me, those are all major risks over the next, call it, 12 months. But like the path to get there, I have no idea, and I could be completely wrong about where we end up.
Yeah, I mean, what I always kind of go back to is like, COVID happened, right? And what did we do? We gave everyone money, right? That's what the Trump administration did, which is like
Right.
so funny because they're the like the no socialism, right?
Yeah.
Like there they were, like they wanted to support the economy, just handed money out to everyone.
Yeah.
And I'm just like, that's why I'm kind of talking about this. I'm just like, I don't know if there has to be economic, like, and that's the thing, like, I don't think we live in a world anymore where I'd say, especially like certain, I don't want to call out anyone in particular because it happens to both parties. Most people don't seem to care about the long term, right?
Don't.
Like, so do we just live in a world that whatever, short-term problems we encounter, we are going to like print money our way out of it, like policy our way out of it, just like support, basically be the socialists that they profess to hate.
When it comes down to it, what you've just said is don't fight the Fed, right? Like if you'd just followed that for the last few years, you're printing money left, and you're bringing it in hand over fist. So yeah, I say don't fight the Fed. Everything is short term right now. No party seems willing to enact, to enact any type of austerity for future long-term sustainability. And if you ask, like, one of the first things we're going to see in terms of a falling out between Trump and maybe Musk and Ramaswamy is on this exact issue, because right before the election, Musk was pretty clear. Oh, I think there's going to be some short-term pain to put us on a good long-term trajectory. Good luck with that. Good luck, like, I think that would be great. That would be, I shouldn't say I think that would be great. I think that would be something that would be important for the long-term success of the country. But I also think that that kind of economic pain will ensure that this is a 2 years of united government and done.
Yeah.
And I don't think that they'll take that risk.
Yeah, I mean, good luck getting Trump to eat some vegetables instead of McDonald's, right?
Right.
He's not gonna eat he's not gonna eat
He's even getting
vegetables. Like,
RFK to eat
yeah,
McDonald's. All right, like,
yeah,
come
yeah.
on.
And I mean, you could try to put it in like a little McDonald's like package, like fry it up. But I think that's interesting. I mean, my take was just that there would be no attempt at vegetables, but you know, I think that, I mean, good for them if they actually try it. I will say that, and I will say, like, I was having a talk, and we like to stay pretty even, even politically here
Mhm.
on the stream and at Prospero. But the one thing that I did want to say was that, looking at Elon Musk, I have never seen anyone in my lifetime this close to the top that knows how to build, that knows how to innovate, right? And it's not just that, right? Like, you fairly have to put him in the like 90th percentile or above as a human at that. Whereas, like, I don't think there was anyone above a 20 that I've seen in my lifetime. So, like, that's where I do have the hope. And I didn't know he said that, and it's good. And that's one thing where I'm just like, if there is some way to set things up long term, and maybe there's a way to like do it that way, like, that is my big hope for this administration, that we do genuinely have someone very close to the top that's even have a whole department around it that could actually, innovate and build some things for the future. So that's my optimistic take. I think we're being a little too hard and mocking, but the truth is, it was very easy to mock the Democrats too. This is just who we have in front of us right now.
For sure, and so I'm very much on the same page with you. I'm not sure that I'm optimistic, because I'm much more of a cynic when it comes to Musk, and especially to a second Trump administration, given that we had a first, and I saw very closely what they did during the first. And so to think that this is going to be a sea change from the first, I don't buy that argument. I don't buy the arguments that, oh, well, this time he knows the kind of people he's going to put in place. It's like the first term was like practice or something, like I. So, and I think that Musk, and from what I've seen of Doge, I don't know, do you pronounce it
I think
Doge?
it's Doge. Yeah,
It's got to be
that's
Doge, right? So from what I've seen of what Doge has said in terms of how they would rip apart and slash government spending, I think most of it so far seems rather foolish. It's sort of like they posted this thing of, here are all the expenses, and like by far, like most of it was interest payments on debt. Like, you can't do anything about that. And unless you're going to devalue the debt, which we're not going, we're going to print more money, fine, but like, that's going to again lead to inflation. That's yet another inflationary policy. And pulling scientific studies out of context and saying we're going to get rid of this, something with hamsters, like you're not going to save any real money. And I think the government does a lot of good with science. So I think people have come in wanting to do this before and have been stymied by the sheer size and not, and like institutional inertia of government. And I hope that they have more luck than others have in the past. And I hope they find ways of making government work more efficiently. But in terms of like a share of GDP or share of the total US workforce, we're not at very high levels in terms of government, the federal government budget. Like I said, so much of this is interest on the debt. That's a totally different issue than the size of the government.
Well, I think like part of it, and I do see that other side, and the other side where I see it like particularly pronounced is that, like, if you're talking about slashing like more than a third of any budget, I'm going to be a little skeptical, right? Especially if you're not talking about saying like over the next 10 years is the end of that, right? It's hard to not disrupt critical things, but the stat that I heard, and I don't remember the exact, it was some high teens percentage. Like, I think payroll in the government is like 17 or maybe 19%. I heard the stat, but it was less than 20, right? Mm-hmm. And so it's like, that's if they fired every person in the government.
Yeah.
They wouldn't be getting to that like more than 1/3 number. And that's when I was just like, okay, I don't really think, I don't really think that you're talking about anything realistic there. And that's what makes me nervous, right?
Yeah,
When
I'll tell you, you know what? Like, you can make a difference in the Defense Department, right? Like,
but
that is
are they going to touch that? I don't think they're going to touch that.
probably not. But you want to identify like a staggering portion of the budget that is unbelievably inefficient, that has not passed an audit in something like 7 years, I think I last saw, and they're like, oh, well, this time they just failed another audit. They're like, well, this time we now have a handle on how awful we are. Like, give me a break. You want to like get into procurement in the Defense Department, and I think you can save a ton of money, but you will be taking on like the craziest lobbyists and the craziest corruption in our government. And again, like, more power to you if you're going to do that, but you didn't do it in the first administration, so I don't know why there would be an expectation that this time would be different. But man,
I mean,
I would love to see it. Love it.
I don't have much faith in Wall Street reform at all. But the only thing I have less faith in than Wall Street reform is defense reform, right? Like, that's the only thing. And I'm very, very low on that. But because it's anything where you see both parties, and like one of like the landmark things
the uniparty,
that I saw
right?
in this, if you ever want to see some truly terrible, I think it was like some F-35 hearing where like they brought up like members of the Air Force, which are just like, we don't need any more of these planes. This is not how wars are being.
Yeah, I remember
like,
that.
All that, and the bill passes, right? Yep. And they take the experts, the people who are getting the planes.
Yep. They don't care what they care what the defense contractors think.
Right, and the bill passes, and to me, that's the cap on this conversation about defense, where it doesn't even like, it's one thing where it's like, the whole like support our troops, blah blah. If you say anything that's remotely like this, it's viewed as that, where it's just like, no, you could be very supportive of the military, everything they do, while also saying there's some waste there.
Right, exactly. Like one of the top programs that Doge has been, it was on that Doge list, right? It was like VA healthcare. It's like, no, no one is going to touch that. That's crazy. You would never touch that. You don't. Why is that even in the conversation? And the Defense Department procurement process is not, right? Like, that's the craziness that I see.
Yeah. It's just like, and I mean, one thing that I'd love to see is like, how much are we, like, I think there was a non-proliferation, but I still think we're spending some money on nuclear weapons, right?
Yeah.
I think it's just like, that seems like an easy cut, just to name one thing, mostly because those aren't really even the most terrifying things out there anymore. So like, you can just build the more terrifying things than that. Like, but no, I mean, that's the problem. It's like, it's the places where we can improve, right? Defense, you could put Wall Street in with just like, anything about like code and anything about like, I think that's where it comes up the most, regulations, things like that, that healthcare, right? You attack those three things, right? And you could balance the budget much better. But the horrifying thing is, I don't really think that's what's going to be addressed. Maybe the healthcare thing a little bit, right?
I'll tell you, the market doesn't think that's going to be addressed, right? Yeah. Like the S&P jumped in the election, came back down. That has not happened with Goldman Sachs, for example. That's not happening with the big banks. The big banks went nuts after the election results came in, and they have stayed right up there. And so, if you want to, and healthcare has not come off like crazy as you would have expected under the assumption that like RFK is going to come in for Health and Human Services and like just totally transform the healthcare industry. The market is not reacting in the way that you would be encouraged for those kinds of things. And maybe the market's wrong, but that's at least what the collective wisdom of the masses and the world is saying right now.
Yeah, I don't like. If there's one thing I don't see the market wrong on very often, it's betting on financial stocks, right?
That's right. There's anything it knows, yeah.
They can be wrong. I've seen some big misses, but I've rarely, if ever, seen them wrong on that. And like and I will say one thing about like Apollo that's been our financials pick. We've written it up since the election. It typically, what I see with financial stocks that have high net option sentiment is there's a bit of they get to their peak, it drops, the stock drops. They have peaks and valleys, but I'm not seeing that. I'm seeing it today.
I was just looking at Apollo, JP Morgan, Goldman Sachs. It's the exact same chart. Pop, and now it is at a new level.
Yeah.
So I know we are past an hour now, so I just want to check that, Dave, you're good to go. One more topic. You didn't have a strict cutoff, right?
Sure. Yeah.
Okay. So as the market's been rallying, I've noticed that the kind of environment for like riskier or higher growth areas of the market seem to have increased. I've heard some participants call it animal spirits being re-engaged, but I noticed ARK has been performing well, and a lot of those areas are rallying. I was wondering, maybe biotech, if that's interesting. I think our Prospero signals have like ASTS and these Rocket Lab and these space high growth companies. But are there any other areas? Do you like those? Is AI still one of those that you could be in going forward?
Yeah, one of them, like I think I called out earlier. Like, I mean, anything to do with space, I think is going to be great. I think there's going to be a lot of that. I mean, AI broadly. Like, I think I've told the story before. Like, the last CTO under the Trump administration, I was on a panel with him, and he was just basically like, our policy was to not do anything that would get in the way of innovation, right? Mm-hmm. And I think that's pretty different than that. Like, the Democrats were thinking about regulating AI more severely, and I think that's the kind of thing that we're seeing, and I think we're just going to be seeing in like a lot of obviously we said outside of chips, a lot of AI boom and anything related to it, anything related to cloud, I would say. But the other thing that I did want to call out as well is quantum computing. We've played this IonQ thing. I think that there's going to be not only a lot of people joining that bandwagon as more money comes into technology, more is developing, and then obviously power is going to become an issue, and maybe not in this administration, but I think we might see more in nuclear, right? Mm-hmm. I think those are the two things that I'm looking out for, and they kind of go well together. I think if quantum computing takes off, it's probably going to be on nuclear power, and that's pretty much what I'm looking at, those two sectors in addition to space.
Yeah, I'm totally with you. I mean, I had been in Oklo when it converted from a SPAC to a stock. That's been a great place to be. It's up, 21% over the last 3 months from it. It hit a pretty good low. Actually, no, it's up it's up 21% today. Sorry, no, it's up like 4x since then.
Big difference.
Yeah. And I think that has been a fun play on sort of a Sam Altman associated nuclear energy company for AI. So yeah, I think energy, if that's one of the things that Trump has really touted is the different energy policy, which of course is going to involve a lot more drilling. Although the U.S. is at this point the largest exporter of oil in the world, and the largest producer of oil. I guess not necessarily exporter, but the largest producer of oil in the world, and it has continued to increase. I guess maybe it can increase more. But he's also talked about really investing in nuclear energy, and I think that would be a huge advantage for the U.S., especially around this idea that we just needed so much more power than we're producing for advanced technologies. I'm with you on space, biotech, sort of, anything that can benefit from, let's just call it an unfettered deregulatory environment. And one in which, like, we know Trump supports space exploration, that he did some, again, back to his first administration, he did some very interesting things there, and he has a lot of fans in the space industry because of it. I am I am in Rocket Lab, but I'll say a little nervous given Musk's position and what that will mean for SpaceX and SpaceX competitors. The same, I think, is true for Tesla and self-driving and Tesla competitors. But what can you do? I think you play what you're given right now, and you see how that works out, and what his position is. I don't know. Who knows if Musk is even still a power player in a year in this administration.
That's
It's really
true.
hard to know, right? It's
People fall
really
out of
hard.
favor people can fall out of favor quickly,
They
especially
do.
those that are like power, like could take away from the potential power position. The one
Yep.
other thing that I wanted to call out specifically is we talked about AI, but I think robotics, anything in robotics, like to drill down a little more. I think, no particular companies come to mind, just because I think we are in a little early in the cycle, and we would like to see who starts to do well, because there's
Yeah.
so many players, and obviously like Boston Dynamics is the big one, but
Yeah.
their stock has never looked. There's a lot of other stuff that you're buying other than just like robotics plays there, and I would be actually more interested in like a pure robotics play. But that's what I would say people should start looking out for. And hey, bring my attention to those stocks, because there's always new ones coming in. I would love to do a dive on any new ones that you're looking at, see how it looks from a value perspective, because yes, I think in the next 4 years we are going to see some robotics companies that start to become real value. They might not be selling a lot of robots yet, but I think we will be getting closer to that kind of production.
Yeah, I think that's right. I do think Boston Dynamics is a tough firm to compete with. I say that I did get to work with them for a while, several years ago, and I really they blew me away. I really admire how they work and what they've built. It was also super fun to drive the Spot robot. And I think that a lot of the time when I see potential competitors and I dig into them, they don't seem like they can compete. The Boston Dynamics has been doing it for such a long time, and they've built such a moat around their tech. It's incredible. So it's a really interesting question. So I'm just going to say let's table it and talk about it next time, and I'll come in prepared, because I do think you're right. And I think it's the kind of thing that with a little research, we could probably come up with a really compelling, group of companies to be watching at least.
Yeah, and I think the big thing to add to that too is like, because they've been ahead, you just don't know how much of that is built in already. Like obviously them making a big announcement on bringing a robot to market would be there, right? But as we're saying, we're not sure we're going to get that yet. So it might just be other companies that could have value that have more arc. But I agree. We should next time we should do some research and talk about robots.
Yeah, that sounds like a fun stream.
Yeah. All right, I think we're good. Dave, thanks for coming and staying for so long.
Sure thing. This is fun.
Stephen, we're not going to do any portfolio stuff.
Okay.
It was long
I just
enough
wanted to say before we wrap this up, I just tagged Urban Finance in our stream on Twitter, and we've had a lot of viewers, over 1,500 on there. So you should go follow that if you liked hearing Dave's perspective. I thought it was a great discussion today.
Yeah. All right. Likewise. Thanks for having me, guys.
Thanks a lot. Bye.
All right.
Thanks, everyone.